lot of big-name earnings reports this morning, including those hideous numbers from Twitter. So you might have missed the fabulous quarter from Treehouse Foods, THS, the king of the private label packaged food business. Now, Treehouse has a long track record of making smart acquisitions, but their streak seemed to run out last quarter when the company had a rare miss and the stock fell from 86 to 63 in 7 sessions. This morning, though, Treehouse reported a terrific 5-cent earnings beat off of a $1.09 basis, with higher-than-expected revenues up more than 105% year-over-year, thanks to some of those acquisitions, and it gave strong full-year guidance. In response, the stock shot up $9.36, or more than 12% today, although it's still down nearly 20 points from its highs last July, when it traded 104, which is why I think this stock may have more room to run, but do not take it from me. Let's check in with Sam Reed, the chairman and CEO of Treehouse Foods, find out more about the quarter and his company's prospects. Mr. Reed, welcome back to Mad Money.
Jim, it's great to be back with you, and especially on the occasion of establishing such strong momentum coming out of 16 that we're highly confident will carry all the way through 17 and beyond.
Well, I want to talk about that, Sam, because I know some of the analysts were kind of in disbelief that you could have a kind of a light quarter. You had some problems with Flagstone. They were all just kind of like Anna was horrible for that little company. But it just seems like not only did you pull out of it, but you're ahead of where you were or where anyone thought you could be. In 3 months, how does that happen, Sam?
We were overly focused on this corporate carve-out from ConAgra. Once we realized that that was taking people away from their day jobs, we got that group back, and in a fury, they went about their business, and in both the go-to-market. By the way, our core legacy business was up 3% in the fourth quarter, and the private brands from ConAgra closed a run rate gap and came from a great deficit to actually posting a gain. We're very pleased with both aspects of the business.
Well, let's talk about that, because I know you paid a lot of money for this Royal Cart branded private label business, but it was still much less than ConAgra paid. It did seem to have some speed bumps. When you got in there, you discover it just wasn't as well run as you would have liked. That was the problem?
Well, ConAgra had attempted to combine their branded businesses with the private label. And I think, Jim, you and I both know from our experiences that is not a combination that works well. We've dedicated ourselves only to customer brands, and having that sole focus is absolutely critical to succeeding here. Right. And by the way, I'd like to point out that there are still great brands in food. They used to be owned by manufacturers, and now they're owned by our retail customers.
Well, let's talk about that, because there was an astounding figure that you put in all your data, which is that private label penetration in the United States is at 18%. That's half of some Western European countries. That, to me, says that your stock has a very long runway ahead of it.
That is correct, and there are markets in the United States that are in the high 30s that demonstrate that in metropolitan areas there is great upward potential. I was particularly pleased that in our legacy business now, 20% of our private label offerings are better for you, natural and organic, that are premium. They sell at a 10 percentage point gain over the average. And we have 20% of our business growing at a 30% clip now. And so private label has become the place where the people looking for health and wellness can go and find products that offer them value, Jim, right, but without any compromise at all with regard to food quality, food safety, or convenience.
And in the time since I've known you've made so much money for people, I just want you to address something that you said on the call, which is because this is how much you've had to change, too. And then from a consumer perspective, we know that through internal research that millennials are the coming economic power, and that their motivation for buying these products, while value is still part of it, is very different consumer. And you're talking about the idea that you can't be in the pantry anymore. You got to be in a lot of other places. Can you still make money if you're not in the pantry?
We do. We very definitely can. It requires a closer cooperation with the retailers that own their brands. And while we used to be charged with lowest landed cost of the national brand equivalent, Now we're asked to develop brand architecture to meet the demands of not the baby boomer generation, but in fact the millennial generation, whose interest in value is incorporated with better for you, healthy products, and a totally different lifestyle in which convenience is everything, and in-home preparation of meals is quite different. And that's why we have changed our industrial base to really focus on where is the market going and try to anticipate that.
Well, Sammy, I know you're back, and I think that this stock's going to have a big run because when you get it right, you get it right big. Sam Reed, Chairman and CEO of Treehouse Foods. Great to see you, sir, and congratulations for the turn. It was not long overdue because you've made so much money for people. Terrific job. Thank you.
Thank you, Jim. Absolutely.
THS, Treehouse Foods. This thing has so far to run. And Sam Reed is a fabulous moneymaker. I've known him for years. Mad Money's back into the room. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.